Welcome, friend. Now, divergence. This is in response to a question from Rabbi, and he just basically wants to know when MACD divergence occurs, when do you get in, when do you get out, and how far is price going to move? Well, I'm going to start off the discussion by clarifying that when price is in a rise, for example, buy the dips in the uptrend, but eventually price will go against you, okay, and you'll get stopped out. Perhaps when price gets to this point, you have negative divergence on MACD to price, which causes price to shift gears. Now let's get into some examples. This is an hourly chart, and I want you to just study this and see all of the examples of divergence on this chart, and then we'll get into entry and exit points. Quite a few examples of divergence in here. There's the first incidence, price cycling higher, MACD waving ever so slightly lower, and we have a fall off in price. Okay. Example 2, price cycling lower, MACD histogram waving higher, we get a reversal in price. Now, when price is going down like this, and where you have angle and separation between perhaps the 50 exponential moving average, I'm not sure which one this is, and the 200 angle and separation, you know that the reversal caused by divergence is going to be ever so short and sweet, okay? Here's another example of divergence down here, price cycling lower, histogram waving higher. Now, let's just go back to this. There is the incidence of divergence. This is a downtrend continuation pattern, okay? So the divergence caused a reversal in price, okay, ever so slightly back up to this moving average here. And the question is, how far was price going to continue on down? Well, A, B, C, D is pretty much the way you read price patterns, and here it is, A, B, C, D. Great team. Downtrend continuation pattern, A, B, C, D. Okay, so this divergence kicked in. Price rallied up to the moving average, and then it tanked this distance here. I'm not showing it on this chart, but leg 1, leg 2. Leg 2 is usually the same as leg 1 in distance-wise, although Cindy Wirt would indicate to us that leg 2 is usually longer than leg 1. When you're in quite a downtrend situation like this, leg 2 is usually longer than leg 1. Here's another example of, on the hourly chart, of divergence. Price cycling higher, histogram waving lower, price falls off accordingly in response to divergence. Okay? Now what does this look like to you in here? We got the fall off in price. Basically, it looks like we're going into an uptrend here, but this is a downtrend reversal pattern as opposed to a downtrend continuation pattern. This is a downtrend reversal right here. This reversal was really presaged by positive divergence on the MACD histogram to price. Price cycling lower, histogram waving higher. We get the reversal. Okay? Leg 1, price equilibrium or consolidation, leg 2. Okay, like that. Price. This is leg 1, price equilibrium or consolidation, leg 2. So we have divergence caused by or signaled by the histogram down here. Okay? And the question is, where do you get in and how far is price going to go? We'll get into that in a minute. Here's another example of divergence over here, price cycling higher, histogram waving lower. And here's another example of divergence on this chart, price cycling higher, the MACD itself is trending at the same level. Okay? So let's go back and review these incidences of divergence. There's the first one, second one, third one, and fourth one. Now, let's go back here. As I said before, this downtrend pattern was reversed by positive divergence on the histogram. You can see that leg 1, price equilibrium and consolidation, and then price turned the corner. Okay? Presaged by MACD histogram cycling or waving higher, price cycling lower. That's divergence on histogram to price. Okay? So the question is, well, where do you get in once you see divergence? Well, this is a Tom DeMark trend line drawn by connecting this swing higher cycle high back and out into the future. Trend line break right here, confirmed by MACD, pardon me, punching up through its trigger line right there. And the question is, how far is price going to rise? Okay? And this is in response to Rebbe's question. Well, we do a price measurement. This is a Joe Chung price projection, pardon me. That's explained in the members area, as is Tom DeMark price projections. And what I did was I measured the distance from the leftmost swing high or cycle high of the trend line down to the lowest point below the trend line. And then I projected that northward. That's how far price was supposed to go, and that's how far it went. So here's an example of where you have divergence. Okay, where do you get in? Well, right here on this trend line break. And then how far is price going to rise in this particular case? It's going to rise this distance here, which is the Joe Chung price projection. Okay, trend line break right here, confirmed by MACD punching up through its trigger line. And the Joe Chung price projection said price would rise that far, and that's how far price pretty much rose. So after you have divergence, I would say the best thing to do is to look for a trend line break and then do a price projection. Now here's another example in response to Rabi's question. Going into the London session in this example, we have price cycling higher and we have MACD waving lower. This is called negative divergence on MACD to price, meaning we're going to get a reversal in price downward. Now the question is, where do you get in? And Rabi asked this question. Where do you get in on a trade like this? Well, you can get in after. This is a candle reversal formation, quasi railway tracks or tweezers. This, I guess, could qualify as an inside candle, followed by a period of price equilibrium or consolidation. This would be a good entry point here, but the best entry point is really on a trend line break right here. Again, Rabi asked, well, when you have divergence, where do you get in? Well, in this case, right after the London Open, we have a trend line break, and the trend line was formed by connecting the most recent swing lower cycle low back to the last most recent swing lower cycle low, projected out into the future. Trend line break right there, confirmed by MACD punching down through its trigger line right there. Now, and you can go at market here or 5 pips below this trend line at a level now ending in 0 on a sell stop. Okay. Now the question Rabi would ask is, well, how far is price going to fall? Well, again, a Joe Chung price projection measuring the distance from the leftmost swing lower cycle low up to the highest point above the trend line, projecting that distance south. That's how far price was supposed to go, and that's pretty much how far price went. Okay. There's two examples back to back of where you see divergence on either the histogram or MACD. You then want to look for a trend line break and then do a price projection.